Good evening. This side Rahul Magan here is a Group Chief Executive Officer, Rishi Consulting, and also a second year law student. Today, I would be covering a very technical topic, and that topic is country agnostic. Now, the technical definition of country agnostic is that this topic is relevant across the globe. There is no specific country where this is relevant. It relevance across the globe. As you wisely understand that every day I spare my time in terms of doing research, in terms of finding the information which is available in public, and also reading newspapers, magazines, journals, and try to find out as maximum as possible in public. From the last 3 to 4 months, one thing which I'm clearly finding is that there is a very big rise of an institution in the global capital market. Like I said, this video is country agnostic, which means no specific country into the picture. And that relevant person or an entity is known as private credit funds. Private credit funds, it is very hard for any financial professional to define an exact definition of private credit funds. Because private credit funds are those funds who are completely closed in nature. Of course, I'm not saying that they are designed in tax havens or they are having a malified background. That's I'm not saying. But having said that, private credit funds are completely closed end structure. What I'm finding is that in many Asian countries and non-Asian countries of the globe, the private credit funds are lending heavily to the banks, financial institutions, corporates, and sometimes the mega corporates also. Before I take this matter further, let me first explain what is private credit fund. Ladies and gentlemen, private credit fund is nothing but a kind of AIF, which is AIF means alternate investment fund. Like I said, alternate investment fund is nothing but a closed end structure, and there is bare minimum information which is available in the public domain. Now, there are different countries who have their different regulatory as far as the alternate investment funds are concerned. But I strongly feel that Irish means Ireland regulatory as far as the alternate investment fund is concerned is pretty wise, and we really need to appreciate that. Now, different countries like US have their different structure, Europe have their different structure, everyone have their different structure. We can't comment on that. But private credit fund is a sort of AIF, which means alternate investment fund. It clearly means that it is funded by the private parties. Now, these parties could be HNIs, high net worth individuals. These parties could be ultra HNIs, ultra high net worth individuals. These parties could be the family offices. These parties may be sovereign wealth fund, maybe the big sovereign wealth fund. These parties may be huge institutional investors, because there are many countries of the globe who are allowing family offices as well as institutional investors to invest in private credit fund. Like I said, the disclosure requirement about private credit fund varies from country to country. And we cannot claim that this country is, having the better and this country is having the better. Now, that private credit fund is basically is of two types. Number one, sometimes they take a call on an entity whose credit rating is in serious trouble. So suppose I go with my favorite example, Ramlal Chole Bhature, and God forbid, if this example coincide, then it's a pure coincidence. Pure coincidence. So suppose Ramlal Chole Bhature is a very big entity. They are selling Chole Bhature all India. They have their shops in Singapore, they have their shops in Malaysia, and they are exporting their sweets and everything to Europe and US also. And God forbid, due to this recession, such a big entity called Ramlal Chole Bhature, this entity is facing recession because of decrease in the demand. And now they have a debt also in the book. Assuming the annual sales of Ramlal Chole Bhature is 6,000 crores, assuming, and the total debt which they are holding is approximately 10,000 crores for a minute. Now, debt to equity ratio is definitely closer to 2, if not 2, we can say that. Interest gearing ratio is also very high. Now, due to the recession, assuming the credit rating of Ramlal Chole Bhature was AA plus, and due to this recession, this credit rating reduced to AA plus to A plus for a minute. All the complete is hypothetical example. In this eventuality, the bank who gave the funding to Ramlal Chole Bhature, that bank would be approaching the entity, and the bank would be saying, since your credit rating has downgraded by XYZ credit rating agency, and they have given their merits on paper, merits means the logic, they have given their merits on paper that on what ground they downgraded your credit rating. In this eventuality, we left with no option but to take our funds back, or we would be hiking the interest rate. There are many people who believe that if the funding is on a fixed rate, it cannot be hiked. No. Actually, from the last many years, I have noticed that the outcome or the KRA based funding is slowly coming up in picture. Now, outcome based funding means that if you are taking 10,000 crores from a bank and you are investing in your FMCG business, like we are taking example of Ramlal Chole Bhature, in this eventuality, it is the outcome of that investment which decides the interest rate. If the outcome is coming good, the interest rate continue to flat. Unfortunately, if the outcome is not coming good, then the bank would be hiking the interest rate. Now, if we go with the same example, Ramlal Chole Bhature credit rating downgraded, which means now they need to arrange funds to pay back. XYZ Bank, who lended to Ramlal Chole Bhature, is reluctant. They are saying they won't do any sort of refinancing. It means the refinancing doors are not open as we speak. In this eventuality, Ramlal Chole Bhature needs funding on an urgent basis. And here comes the private credit funds. Private credit funds, first of all, scrutinize your background. They will say, what is your annual sales? Why you took 10,000 crores of debt? What is the outlook of your FMCG business? whether they are happy with the outlook or not, whether there is any wrong investments made by you while once you took the debt of 10,000 crores, whether there is any possibility that their own board member or their own representative, shortly known as rep, can come on the board and sort it out the issue. There are many permutations and combinations that relevant private credit fund will take care. And if they are finding that permutations and combinations are somehow making sense, or there is a sense of alignment between Ramlal Chole Bhature and that fund, they would be funding to Ramlal Chole Bhature. But having said that, the basic problem with the private credit fund is the interest rate. And more importantly, is the legal documentation you are supposed to sign. That legal documentation varies from country to country, and it also varies in which country that private credit fund is domiciled. So suppose the private credit fund is domiciled in Luxembourg for a minute, and they are operating in India also. And for a minute, like we are taking all hypothetical example, that Ramlal Chole Bhature is an Indian entity. Principal, that's a separate thing. They have a shops in Singapore, Malaysia, and XYZ. In this eventuality, the Indian laws as well as the Luxembourg laws, both laws come into the picture. And Ramlal Chole Bhature should be competent enough to handle both the laws. There is a strong possibility that funding to be happen not in functional currency, which is Indian rupee, because we assumed that Ramlal Chole Bhature is having a principal office in India. There is a possibility, a wide possibility, that funding happens in foreign currency, which means US dollar or any other foreign currency. And Ramlal Chole Bhature to go with the reverse dollarization swap. Technically speaking, reverse dollarization swap means that when you are converting your asset or a liability which is in dollar terms into the local currency. Like in our example, we assume that Ramlal Chole Bhature is an Indian entity, so which means Indian rupee is the local currency. Ladies and gentlemen, remember that funding can happen in any currency, because at the end of the day, what really matters in which location the fund is domiciled, with which banks they are having their relationship, in which currency the funds are coming, what is their agreement with their investors, and in which currency the investors are funding. Now, in this eventuality, not only the legal work, but also the financial market, which is the hedging cost, the reverse dollarization swap, everything to be taken care by Ramlal Chole Bhature. Ladies and gentlemen, we really need to understand that private credit fund can also be used as a weapon for acquisition also. Now, when I'm using a word weapon, I'm meaning that they can be used for a long-term funding. They can be used for a bridge financing also. But once again, that completely determine on the multiple factors, which unfortunately is beyond the jurisdiction of me. It depends on in which domicile, in which country they are domiciled, from where they are getting the money, the investor's background. It also determines whether the investors are ready to take a long-term risk, because Ramlal Chole Bhature is going to buy another Chole Bhature company or FMCG company. Whether they are happy with 1x, 2x, 4x, which means 1 times, 2 times, or 4 times, or they want 20 times, 30 times, it all depends. What kind of correspondent bank that relevant private credit fund are having in the books, whether these correspondent banks are competent enough to give the credit line to Ramlal Chole Bhature or to that private credit fund. What is the payback period? Whether the payback period is having any amortization clause, which is generally the scene, or whether it is having any accreting clause. whether there is a slight possibility of payment in local currency. However, payment is received in foreign currency, which means Ramlal Chole Bhature received payment in dollar terms for a minute. However, they paid in Indian rupee term. In this eventuality, the USD INR forward rate, which is on buy side because they are buying dollars. First they are selling, then they are buying. It is on Ramlal Chole Bhature. So there are many things which we need to look at. But having said that, a very interesting fact is that now onwards, there are many dimensions to raise the funds. You have private equity players, you have venture capitalist players, you have alternate investment fund, you have large value funds, you have accredited investors, you have banks, you have hedge funds, you have the private credit funds. So there are a variety of options which we are having. But having said that, not all financial markets of the globe are competent enough to give a space which these funds require. Remember that these funds are very important for any local economy. The presence of these funds can create a flow of money in a system which cannot be easily countered. Henceforth, I always request that international funds should be invited and they should run their show, of course, under our regulation. The world of private credit fund is very big. If you are expecting I'm able to cover this in a 10 minutes or whatever 16 minutes video, then you are incorrect. As the time would progress, I would be covering many more facets of private credit funds.